What's up everybody? Welcome to the Stocks channel. My name is Corey and today we saw the stock market going up across the board with the Dow Jones closing at a brand new all-time high. Is the tech correction over and we're going higher, or is there still more possible downside? First, let's take a look at the S&P500 Spy Etf. So let's crack open this chart and see what's going on in the stock market today. Alright, so on the S&P 500, we had a very bullish day going up 1.1%. And we did find strong support intraday over that open, which is right on top of that 20 simple moving average. So like I always say, we follow the price action and we follow the trend, and we were still bullish on this market as of last night because the price action and the trend were still bullish. We see a follow through with that bullish momentum with today's price action, and now we're just a few bucks away from retesting that all-time high around 393 and 394. Now on closing prices, the all-time high was back here on February 12th, which was a closing price of about 392.64. So it's just under 393, and that's the key level that I want you to pay attention to, because that is going to be a strong resistance level that if we do break out and close over that level, that's going to be a very bullish sign for the market. However, if we get rejected at this level and we struggle to close above it, that could be a bearish sign for the market and could actually mean that we are topping out and we're due for a correction. So watch SPY level of right around 393 very closely. It is going to tell you the most critical price action story that you need to understand in this market is whether this market wants to go higher or if this is just a relief rally before the correction continues. Now, if we do start closing over 393, don't forget I do still have a price target up here at 404, but I don't want you focusing on 404 until we start getting a couple closes over 393. So like I always say, each and every day, trade with what's in front of you and don't focus too much on where we might go. Let's focus on where we're currently at and where the price action and trend are currently favoring the market to go. So like I said, with the 393 level, if we get rejected from there, there's still possibility that we see more selling in this market. We're not out of the woods yet just because today's price action was bullish. However, we're still going to favor the price action and the trend, so we are still bullish until proven otherwise, and we still need to see the 5 EMA cross below the 13 EMA and the price action to close below the 20 simple moving average to even think about getting bearish on this market. There's still plenty of support below, so I want you to watch support, which is now at 389, 386, and then of course down here around 381. We're still holding up above a positive sloping 20 simple moving average and a positive sloping 50 EMA with all of the moving averages stacked to the bull side. So those are the key levels I want you to pay attention to on the S&P 500. And as I always say on the Stocks Channel Discord, don't get greedy and don't be afraid to lock in profits. Having cash is going to be your best line of defense in the event that we do see selling in a correction. You can always put that cash to work. If you're all in the market and we go through a steep correction, you're really going to feel that pain of that correction because you have no way to balance the selling because you have no money to put to work at lower prices or to hedge with. All right, next up is the Nasdaq 100 triple Qs, and we saw the Nasdaq 100 going up 0.82% today, but we still do have a short-term bear trend. The price action is holding up above the positive sloping 50 EMA, but you can definitely see that the 20 simple moving average has rolled over and it's now negatively sloping. So yes, we are picking up bearish trending in the Nasdaq 100. The only line of defense holding the Nasdaq 100 bullish right now is that the price action is holding up over this 319 level, which is a 50 EMA. So price action is king, and right now I still think that the price action is telling us the Nasdaq 100 is bullish as long as we continue to close over 319. So that 319 level on the Nasdaq 100 triple Qs is by far the most important level that I need you to pay attention to. If we start closing below 319, that will be a bearish sign, and we already have bearish trending. So that will actually put downward pressure on the Nasdaq. And if the tech sector is going into a bear market, it's very unlikely that the S&P 500 is going to break to new all-time highs. So right now, tech is the leading indicator of whether the market is healthy or unhealthy. So watch that 319 level very closely. On last night's episode, I did talk a lot about what a possible correction is going to look like. And if you didn't watch last night's episode and you're interested in how this ABC correction could play out, I'm not going to repeat everything I said last night, so you might want to go catch up on that video. So just remember that it's very possible that we completed an A wave and that we are getting a relief rally bounce into a B wave, and that could be a bull trap. It's going to set it up and it's going to look like the market is going back up to new all-time highs. It's going to look like we're going back into a bull trend. But as you know, the Nasdaq 100 is in a bear trend in the short term. So we need to follow the price action. If we do come up to this level about 325 to 328, that is still in that bull trap range. It's going to look bullish, everything's going to feel right, and you're going to think the market's going to blast right through those levels and we're going to keep going higher. That's why it's called a bull trap. If it didn't feel easy and you didn't get complacent, then it wouldn't be a trap. So watch that 325 and that 328 level. That is a cloud of resistance that won't feel like resistance, but trust me, it is. So if we do start breaking above 328, then that will start looking a lot more bullish and we will have price action closes back above the 20 simple moving average and we'll likely see the bull trend start forming again. But right now we're in a bear trend, so we want to be defensive when we're in a bear trend and we don't want to be too aggressive and we don't want to be too exposed to the long side because it is possible that we complete this C wave down much lower. So we're not going to get in too much tonight on where this C wave could go because right now I want you to focus on this B wave. So watch resistance levels above right around 325 and it really goes all the way up to about 328. If the triple Qs struggle to break through those levels, I want you to be aware of that is a possible trap and we could be heading lower off of those levels. That is most likely going to synchronize with my price targets on the S&P 500 and the Dow Jones. So pay attention to all of these price targets because they're likely going to tell the same story. And as we hit these price targets, it means we could see selling and we could go through those corrections. Next up is the Dow Jones ETF, and we did see the Dow Jones leading the way today, going up 1.31%. The Dow Jones closed at a brand new all-time high and it was very decisive. Look how bullish this candle was today and look how far above the previous all-time high we closed. This is by far a very bullish indication, and I've been saying this for a few days now, but this sector rotation is actually benefiting the Dow Jones, and we're seeing the Dow Jones outperforming the S&P 500 and the Nasdaq 100. However, you can also see my price target is just a stone throw away at 322 and we closed very near 320. So we're only about $2 away from my price target on the Dow Jones, and we're only about a couple bucks away on the S&P 500 from hitting my price target, and we're only a few dollars away on the triple Qs from getting into that bull trap range. This is why I'm telling you all of these price targets are coming together and all of them are coming to a head at the same time, and this could trigger a correction. Typically speaking, the market moves together and all three indices right now are starting to look bullish, but we do see weakness in the tech sector because of this recent rotation. So don't get overconfident in this market. On the Dow Jones, I want you to watch the 322 level very closely. And as far as support levels go, watch this 312 level. And if we do break below that, it's likely we're going to test the 20 simple moving average, which is actually going to be right around the same level, and the 50 EMA, which is going to be right around 308. So those are the critical levels I want you to watch on all three indices, and the price action in the indices is going to tell you whether this market is going higher or going to go through a correction in the near future. On the ARKK ETF, we see it going down negative 0.52%, and it's actually heavily underperforming the rest of the stock market when they were up today. So the ARK ETFs are not looking so hot lately, and we did see the price action closing right near that 50 EMA. There's still support down here at 135, and if that does break down, there is another support level around 125, and there's one more support level below that around 116. So watch these support levels very closely, and just like with the Nasdaq 100, you can see that the ARK ETF is in a bear trend, and the price action is struggling to hold up above critical support. So this is not a bullish sign, and this is not what you want to see with the ARKK ETF if you're thinking about going long. It does look like we will see lower prices, unless we can start bouncing off of these levels very soon. Upside resistance is going to be 142 and the 20 simple moving average at 147. Next up is the VIX, which is the fear indicator, and we did see the VIX getting absolutely destroyed today, going down negative 7.66%. The VIX did close below support at 21.5, but just barely, only going down 0.2 points below it. There is another support level down here around 20, and don't forget that the VIX could easily bounce off of any of these support levels and we could see more volatility and selling come right back into this market. So don't get too comfortable just yet. We're not quite out of the woods, and we do need to see if the VIX is going to try to break down below 20. If the VIX breaks down below 20 around the same time we're breaking through these price targets, that will mean the market is getting very bullish and we're likely going to see brand new all-time highs and continue to trend higher. So these next few days are going to be very critical on the markets, and the price action is going to tell us a whole lot about what to expect in the next coming months. On the US dollar, we continue to see weakness with the price action, and we're still in a very strong bear trend, so it does look like the dollar is going to continue to head lower towards $89. On gold, we're struggling, but we are holding up above support at $17.76, and my price target remains up here at $18.26. On silver, we're still in a bull trend, and we're still holding up above support at $27.5, so my price target remains up here on silver at $29. On Bitcoin, we're also seeing a struggle, but the price action is still holding up above the positive sloping 20 simple moving average, and we're currently still in a bull trend. I still think it's possible that Bitcoin could retest the 50 EMA, so I want you to watch that level, which is right around $41,200. Remember that my Bitcoin price target was up here at $54,700, and even though we did break that level, currently it's looking like a false breakout, and it looks like it is triggering a correction. So be patient on Bitcoin because it is still possible that we have a lot more downside in Bitcoin before we start heading higher. On Amazon stock, we're barely trying to close back up within this consolidation wedge, and it is looking like it's finding support right around that 3160 level. Upside resistance is going to be the 50 EMA right around 3230, and we will possibly retest the upside of this resistance trend line, which is right around 3300. So Amazon is still looking relatively decent, even though we are in bearish trending and we're below the 50 EMA. If I zoom out here, you can see that Amazon has been chopping around. So as long as it maintains inside this consolidation wedge, it could still break out to the upside eventually. However, it's equally possible it breaks out to the downside. So watch support levels at 3090. And if we break out to the upside, watch resistance right around 3320. On Tesla stock, we went up over 6% today, which is a very good sign for Tesla. But the bad news is that we're actually still holding up below resistance, which is now a negative sloping 5 EMA. The price action is now below the 50 EMA for 3 days in a row, and that is not what you want to see in a bull market. Tesla is definitely in a bearish trend, the price action is still bearish, and there's possibly still more downside in Tesla stock before we can go higher. So right now I want you to watch these support levels, which are down here at $618. And if that level does break down, it's possible that Tesla does go back to about $570. Now, if Tesla's price action can start breaking back above the 50 EMA, which is right around $752, that could change and we could see Tesla start going back into a bull trend. We still need to see the price action get back above the 50 EMA and the 20 simple moving average before we can call Tesla bullish. So be patient on this stock, and if you're in it for the long term, this is okay to start accumulating here. But if you're a trader, you want to be more patient and you want to wait for that possible bottom, which could be much lower. On Apple stock, we went down about negative 0.41% today, and we are holding up above support right around that 124 support level. It's very easy to see that Apple is looking bearish because it's in a bearish trend, and we have a lot of price action closes below the 50 EMA, and we're still closing below a negative sloping 5 EMA. So Apple stock is essentially in free fall, but it is possible that we are finding support at this 124 level, and we're getting ready to start heading higher. Don't forget there is an open gap above on Apple, which won't close until a price target about 132. There's a ton of resistance we have to get through before we close that gap, but it could be time for Apple to start bouncing, and as long as support holds up at 124, we could start heading higher from this level. If support breaks down, there is another strong support level I want you to watch, which is right around $121. On the financial sector, we continue to go higher, going up 1.94% today with a very strong bull trend, so the financial sector is still looking very solid. On the industrial sector, we went up 1.89% today, and we also still have a very strong bull trend on the industrials. On the energy sector, we went up a whopping 3.54%. And again, very strong bull trend with very strong bullish price action. On healthcare, we went up 0.69%, and we are back to closing above the 50 EMA, which is a good sign. We're still in a bearish trend, but the price action is starting to show some bullish relief. And if we can get more price action closes over the 50 EMA, that is a step in the right direction for the healthcare sector. So going back to the S&P 500, you can still see that we still have very strong bullish sectors in the industrials, financials, and even the healthcare, energy, and tech sector are starting to bounce off their levels. So all of the sectors had a bullish day today, but it's still not enough to say that this market is definitely going to brand new all-time highs until we see SPY start showing some price action closes over this 393 level. So remain disciplined and remain patient in this market and don't get overly bullish. You already know that I don't think you should be bearish in a bull market, and because I said this market is bullish, we're not even going to talk about shorting this market. However, I still want you to be defensive until we can get some price action closes over 393. Don't forget, it's very possible we could see some swift selling any day, so I don't want you to get too overly complacent in this market. Just because everything's looking bullish right now doesn't mean we can't see any selling. So remember, if you're looking for a disciplined trading community, come check out the Stocks Channel Discord. You can find out how to join the Discord server by clicking on the link in the description of this video. Next up is our hot stock, which is of course Lockheed Martin, ticker symbol LMT, and we did see Lockheed Martin going up 0.09% today. We did hit the next price target, which is up here at 348, and intraday we were actually trading above it about 350, but we did go too far too fast and we were extended outside the upper Bollinger Band. Typically speaking, stocks don't like being outside the upper Bollinger Band, so we did see a retracement, but we're still seeing support holding up around 344, which was our first price target, and that is also the 50 EMA. So we're seeing strong support where we want to see it above the 50 EMA, and we're definitely seeing some bullish trending picking up. So Lockheed Martin is looking really good, and it looks like it should have no trouble blasting through this price target and getting up to our price target up here at 357. So Lockheed Martin is doing a great job being a hot stock, and it looks like it's blasting through our price targets with absolutely no problems. If we do break down below support at 344, the next support level I want you to watch is right here around $340. So don't forget, if you want more hot stocks daily on the ground level, you have to come check out the Stocks Channel Discord. You can find out how to join the Stocks Channel Discord by clicking on the link in the description of this video. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.